SMF Street Traders, we're putting in a bottom down here, SMF Street Traders. And the thing about it is, the longer that we hold that teeny price action, and the bigger the base that we can build mathematically going north of 21 and north of 25 now, that means this is how bottoms get put in at price action. You can see clearly all day long that the short action happened right here. Half bar breakdowns, that's the short action to the bottom intraday. Now that market maker can just walk them teenies right up. But once again, it's exactly 9:03 a.m. Down here in your info panel, you've got each one of the boxes are timestamped. So it's 12:03 Eastern Time, and the last bar was 12 o'clock and 11:57. And basically, once again, when we go down to this bar here, the 927, or yeah, so basically 1154 bar, that half price was 146.44. Basically, that's that bar that what we're going to show you over here in that bid and ask. As long as I'm above that print at 50 by 52, that's a nice thing. But let us not forget that within the brain structure, that the teeny movements in here, this here, current trend ratio has to be going the right way, okay? So that we can see here where these ratios were, that you understand how to trade and what they mean relative to price. You still trying to build above 15 intraday, and this is this very long-term bottom price action at that lower teeny market. Remember, it's the very first day, part of this day, it's lunch hour in New York, because this is 12:03 Eastern Time. The short market happened over here, which Ken Flagg had pointed out. And there was the breakdown, nice entries on these shorts here. You break half the bars. You finally got down to where a bottom has been put in intraday. MMTs are being taught that within the pricing structure, again, we have to build and shoot above that 21 mark, but we need to really get higher and start working about above 20 now. So before, when we were working between 0 and 5 and it come back to 0 and so forth, that was in the bottom action over in here. We have all the readings right here. So I want all MMTs to go back and look at where their intraday ranges were. Okay? Relative to price action, MMTs. MMTs got to break above. I'm sorry, it wasn't all the way in the video, but I got to break above that 15. 20. And we need to hold above 20. Go up to 30 now. This will build a momentum breakout when that occurs. Not until then. Once again, MMTs, the MMTs that you are, what the MMTs are learning is how a long-term price action bottom gets put in within the system itself. And this is this very long intraday bottom right here at our price controls. These lines are SMF price control lines, not the stock market lines. These are created with our system. We've already been showing you enough, so you know what it is. And you know that I told you on the intraday range in the brain. So we know that this is the bottom. And we know that they've taken it 3 times down short. And this is the intraday swing low. And we've been adding in here according to our pricing mechanism in the brain. And the brain has allowed us the ultimate entry at the ultimate price controls, working our bid and ask trend ratio, which is in here, trend ratio here. We know where we're printing on Goldman at all times. So basically, we know that the teeny action is not, we know that the intraday range has got to go north. So we've been coming down, put it in that long-term bottom. Right here, you can see clearly intraday range here was only 13 then. You can see at different locations that it was 10 here. You can see over here that it was -5, was 0 to 5 really. It calculates 5, but it was really 0 to 5 here. And it was really 0 to 5. But immediately popped right up here like we said it would. And you would know that the intraday range popped up to 11. But that was a big pop in there, and that's why that 3-minute bar went up. In fact, we popped to a high here of 11 still, and 11. So you went 11, 11, and 11, and then you finally popped to 12, and you went up there. But look at the lower ends. We were at 10. We said we must stay above 10. Here was 7. It pulled back, but right away immediately popped up to 10. Popped up, look at here, popped up to 16, giving that price some stability throughout the day right here. Here, I'm sorry, right there was 15. Right here, let's take a look at intraday range. It was at 12, but because it was well north of 10 by 12, that was giving this whole bottom that price action stability. See, these are the readings. They're in the video. That's 12. Oh, let's take a look at that one. Oh, 15. Wow, 15. Wow, 17. Isn't that something? 16. Isn't that something? 16. Isn't that something? 16. So that's been given that ascending 369 back up to this major teeny line right here. And these are automatically calculated for you. The prices were calculated before the open. The thing that you want to know is how a bottom gets put in. Let's go back to half of that bar, 146.57. Let's take a look at the bid and ask. It's right there, 146.57 by 146.60. That's the market maker. He's on both sides. He's right there at half of your bar in the info panel, folks. Right there, to the penny. Now we go up a bar, it becomes 59 pennies. So half of this last bar right here is the focus. That's 59 cents. And basically I'm right here, 59 by 60. And I'm only care about one thing. The barrel's an object. It's the pricing mechanism in here that has to occur. The pricing mechanism has to go above 20 here to take out that resistance. MMTs. And right now, I know where my bar is. It says so, 146.59. That's half of that 3-minute bar. And the market maker print is 59 by 62. We got to walk above 59 pennies to gain momentum. And that does not occur until we get to that 20 range as we are. Right there. That's how you take it out. And that's how you've been told. And that is the pure pricing, teeny resistance, price action. Below 19, I go and come back and test half of that bar. But you got to go well north of 20 to 25 and higher to get up here. MMTs. You've been learning how to put a price action bottom in. You should be proud of yourself. Here, let's recap the short side of the market on it. Here's today's trades. Look, let's just take a look at where you're getting in versus the public. Here, let's blow it on up for you. Okay? And let's make sure that you see the 27th. That's right here. So basically, it was one short. Couldn't close above half of that. Couldn't get up to that teeny line. Couldn't close above it. Slid the bid. It was a second short. And that second long short, there's short one. But look at short two. Look at how long it was. Now listen. You're buying down here at the very bottoms. Right here. We have it on that other video. You've done well. And not only that, you're also learning that you got to go north of 25 now to go up in teenies. These are the SMF market maker teeny price prints that also give you positive MMT paycheck. So when I go above 22, if I get above 25 here live with you right now, I'm showing you here and now right at that price, and I'm showing you that the closer and I get above 25, I'm going to continue that breakout. And it was all about one thing, MMTs. It was about buying that intraday bottom and what the price controls would be, what the system would tell you, how it would happen, where it would tell you to engage and transact and start accumulating your long positions before the breakout, and what would lead lead up to that momentum and everything that you're witnessing here and now, and you got to go above 25. Right there is the highest count that we had. It was above 20. Right now it's at 23. I'm waiting for that MMT big breakout. That means that the people that are still in it, like David and the rest of them, and people been accumulating that breakout before it's happening, buying into that bottom, what the controls are, how to scale in on an intraday bottom. That's this bottom, and accumulating it and using the SMF pricing mechanism and exactly what it would take for breakouts to go higher, how bottoms are put in based on ratio at the price, not based on the what if. Will it do that? Should I be looking at this? No. This is a market maker platform that puts in the price, and you've witnessed it, you've seen it. There isn't any more thing I can sell other than going north of 25 takes me up teenies. And I told you from over here, look for 3 teeny movement, which each teeny is 11 pennies. We've already been moving well off them lows over here at the purchase price. And we're trying to build that momentum. We got to work now 20 to 30 to go higher. MMTs. SMF MMTs. There was some short sales that were being taken. We dropped 7 teenies below the market, which each teeny is 11 pennies in the system. The minute that we had popped up here, when these lows were being bought, when these long-term lows were being held, and we came up and we made the highs, at that time, that was the exit. The short really happened here this time. And basically, the size of the bar, half below the bar, and breaking the lows over here, below half bar, below half bar, below half bar, below half bar, all the way down below half bar until it finally stopped again. So basically in the black box here, in the pricing control system, is each teeny's 11 pennies. This move right here is 7 teenies down. Well, if you short 7 teenies times 11 pennies, you just made a nice short when it broke. Now you can go back to buying the bottom again, and same rule will apply. If you're in at the bottoms and you keep the stop market, we have showed you how it failed. It's intraday. Right now it's 10:25 a.m. Pacific Standard Time, and it's clear that the MMTs can see the intraday failure and the short. Now, let's see if I can zoom out. Let me zoom back in on the move for you. Let's recap it again. And let's simply start out right here at the first bottoms that were made. This is where the bottoms were made, MMTs, and you were buying this bottom, and you went up, you pulled back, and you were going higher. When you got up and you failed here, your stop market went in automatically. We had another breakout, and we came back up, and we held that long-term bottom. Once the 3, 6, 9, 12 breakout ended, right up here at this bar, which I will find here on our platform. Hold on, I got to scroll down and look for it. The half bar was 146.64. So from the bottom over here of 146.20, where their entry was during that long process. This was a very, very, very long bottom that was being put in. And when the price failed up here, it became a short. And it did, because it also took out that long-term, this bottom, this higher teeny, is where you don't want to see it break below the bars there. Then, not to mention the lower pricing level where your entries were, across this teeny line, it broke down 3, 6, 9, 12. And obviously, we went very weak in the IR, and we come back down to a bottom again. There's that short side. When you break something, that's where the short is automatically triggered.